The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, everyone. It is Thursday, March 7th. It is about 1:45 Chicago time. Normally I'll kick this thing off around 10 to 1, but since the markets are a little quiet for the moment, I thought I would just go over the things I have to do before I present. So those things are the disclaimers. So I'll take care of those so that we can just spend a good full hour in the room going over the trade setup. And then after that, going into a live market environment and finding those setups and then pushing buttons on the DOM here. I'm going to show you how to enter it, how to manage the trade, and then how to exit the trades when it's time to. Okay. Now, if you're brand new, this is going to be a great syllabus for you to use and lean on while you're on the trial. Okay. Because what I'm going to do is I'm going to go over the trade setup in slow motion. Okay. I'm going to break it down. And then this will give you a great opportunity to ask questions. Okay. In addition to that, if you are a member of CFRN, this is a good opportunity to have more screen time, get to know the personalities of the markets that you're trading, lean on me for questions, and just, again, get you over that, any obstacles or learning curves that you need to get over to get you on the right path, whether it's going live for the first time or, getting over, maybe some stumbling blocks. Maybe you're losing some money here and there. You're not getting in anywhere. So you're trying to fine tune your game, so to speak. Okay. So that is the game plan for this afternoon. We'll spend about an hour in a live market. The markets are moving. So there may be, some things we really could take a good look at. I'm also going to go over some of the traps that people really fall into. Okay, you're going to hear me stress about trending, markets that are trending. That's a big trap people fall into. You're going to hear me talk about drawing trend lines. Also, the color of the cycle and what's easy and obvious versus what's a watered down version of a trade. What could reduce the probabilities of a setup. So I'm going to go over some things and make some observations. So hopefully if you can grab some of that information and put it in your memory bank. So, if when you are trading live, you kind of remember some of the things I highlighted. Okay. So the idea really is to kind of get the chip stacked into your corner a little bit so you're on that path to being successful, at least comfortable and confident to push a button. Okay. All right, so as I said before, we're going to go over the disclaimer first. And again, I say this every week, but I really don't like to throw these up, tell you to take a look, and then shove them back down. I'll go over them for 5 or 10 minutes. Okay. So here's the scoop. First disclaimer. Basically, it's a warning flag to anyone that is really brand new to our space. Our space is trading futures. It's a leveraged space. Okay. Basically, you can lose in our space. You lose everything and some in your trading account. Okay. If you're not using stop losses, if you don't have a trading plan, if you're not looking over the trading account, what the news items are, if you're not engaged in what the market's doing, if you're not following some of those very simple variables, this disclaimer is going to hit you right smack dab in the face. Okay. I've been doing this for almost 25 years, and I've really seen the good, the bad, and ugly when it comes to this. That's why I don't take it lightly. That's why I talk about it. Okay. In addition to that, the money that is in your trading account should be risk capital. So if you do lose all the money in your trading account, does it affect your lifestyle? Okay. Are these funds that you're using to pay bills with? That's a big red flag. Okay. It's got to be disposable income. All right. We'll ask you when you fill out or not even us, but any online application, they'll ask you, okay, what's your liquid net worth and all that other stuff to make sure that you're trading risk capital, money that you can afford to lose. Okay. Now, with that warning flag and kind of that, that thing hitting you right smack dab on day one here, usually the guys that get to the CFRN area, this disclaimer, they're kind of numb to it. Okay, my experience with CFRN and some of the members, they've been to this room and that room and that room and this room, and they've been through a few gurus here and there. So, they get this. A lot of times, the guys that do come from different rooms and educators, they bring some of that baggage with them. It's really hard to, kind of reboot the computer and leave all that stuff aside. But it is what it is, and that's kind of what I've seen over the years. People gravitate towards CFRN because they haven't found what they were looking for in other places. Okay, so the disclaimer really is, they're really numb to that. They've been through the battles and the wars already. So again, this is basically for the guys that are brand spanking new, guys that are just learning about what futures is and what maybe CFRN is all about. Okay. The good thing is, if you're going down the CFRN path, okay, you're going to have a set of rules, right? And we're going to talk about those rules. Okay, so you're going to have a game plan, right? As outlined here, every trade is going to have a stop loss attached to it. All right, so that reduces that risk. You're on a 4-tick range chart. Okay, you're looking at the market under a microscope, and it's rules based. So you really have to be engaged in what's going on in the marketplace, because you are going to be using aggressive risk management, and there'll be times where you need to trail the stop, or when just to get out of a trade. Okay, so you have to be engaged in the market. You have to be in front of the screen. Okay, you have to practice a little bit, and you have to learn what this guy here is. This is our depth of market. Okay, this is where we buy, and this is where we sell. Okay, all of our execution is done on this depth of market. So you're going to have to get used to pressing the buttons here and looking at the setups at the same time. So there'll be a little bit of education there if you're brand new. Okay, but the point is that all those scary things I talked about, as far as the disclaimer is concerned, okay, you're going to water that down a little bit, because you have all that. That will be in place if you decide to go down the CFRN path. Okay. Now, for full transparency, if the worst case happens, okay, maybe a news item comes out, something gets bombed, something happens where the market goes absolutely insane, and you're doing all the right things, all right? You're in front of the market. You're in front of this depth of market. You're following the rules. You have a stop loss in place, okay? You're doing all the right things. There is a possibility the market gets so volatile that it does jump over your stop. I think over the last 20 plus years, I've seen that happen maybe a few times. It is a possibility. You should be aware of it. That's why we're talking about it. But the good thing is, in the end, if that did happen, you know what? You're going to be in front of the screens, right? Yeah, you're going to freak out. Okay, that's your natural reaction. You're going to freak out. The good thing is, in the end, if it does, you're going to hit this hot key here, which is exit at market and cancel. Get out of the position, cancel all orders, and figure out what the heck just happened. All right? Or your backup plan is to call me at the trade desk. Okay? So I know right out of the box here we scared you a little bit, especially the guys that are brand new. Like I said, the guys that have been around, they know what this is all about. But we have to talk about it. We don't like to kind of just put it in front of you and take it down. It's something you should know. Okay? At least I want you to know. Maybe not everybody does. Second disclaimer is my relationship with CFRN. Okay? CFRN, as outlined here, it's their indicators. Okay? It's their trading tools. They're the educator. They're the ones that are providing the video workshops, and they're teaching you the methodology. The training room is part of that program. Okay, every morning from 8:30 to 10:30, you're going to hang out with Mike. Mike is in there. He's in a live market environment like I'm going to do shortly, and he's answering questions, and he's putting trades on, taking them off, making some observations, answering questions. He's doing all that for 2 hours. Okay. Do I work for CFRN? No. I work for Daniels Trading. Okay. Their indicators are built inside our platform. The platform here that you see in front of you is called DtPro. This is their indicator set inside my platform. Okay. So I represent the platform, execution, brokerage. Okay. If you decide to use DtPro and the indicators built into it. Okay. I take it a step further. I'm in the training room every single morning, so I know the trade setups. I do, for 1 hour every Thursday, I go over the trade setups in slow motion to give you guys a better understanding of what the heck's going on, especially if you're new. I also do it for those guys that are members, that are using DtPro, that need help. All right, so what I'll do is I'll spoil you guys a little bit just to give you guys an edge. Okay, if you have questions, ask. I know them. Okay, I'll be able to answer them. If you're having troubles with, setups or the platform, or, you can't get this to work, or, hey, I got an expired pop-up or something, you direct those questions to me. Okay, if it's something like, you know what, I love this thing, I want to go to CFRN, I want to sign up, payment is between you and them. Okay, you'll just correspond with them directly. Anything on their website, anything in their members area, Thursday night workshop, Logic 247, Telegram, the concierge trade alerts, the daily doubles, all that other stuff. If you're signing up and you're not getting this or that, you would reach out directly to them. Also, the one-on-one mentoring they offer, they have a link for that. You just fill that out and send that to Mike or Dwayne. Okay. It's kind of how the relationship works. Okay. They're the educator. I have the platform. We've been working together probably for 8 years, maybe even longer than that. Before the education part of it, before all this, there was just CFRN radio. And at some point, Dwayne had asked me to come on the radio and offer, opinions and answer any questions people had. And what I noticed from my side was a lot of people were just asking Dwayne, show us how, show us how, show us how, showed us how. Him and Michael got together. I just happened to be at the right place at the right time. Our platform reads easy language. Michael and Dwayne are TradeStation developers. I put it all together, and what you have is this finished product. Okay. The indicators are available on Ninja, so if you're a diehard Ninja fan, they're available there too. The biggest difference is the support. Okay, the guys that go down the DtPro path, they know they can call me anytime. Okay, they call the desk, I pick up. So if you have a trade-related problem or question about setups or platforms, you guys know you can call me directly and talk to somebody that knows what's going on and it's on the same page with you. Whereas with Ninja, you're going to have to email back and forth, and hope you get the solution that you're looking for. Okay? So that's it. All right, that covers that part of it. So now we're going to talk about the nuts and bolts of what you can expect to see in the training room. Okay, you're going to hear some of the buzzwords, setups, a lot of the things that I talk about, you'll hear inside the training room so you can relate to it. If you listen to this recording, you'll be able to relate to what Michael's talking about, okay? Again, along the way, if you have questions, fire them away. This is live. I'm at the trading desk. So my phone might ring. I'll just tell you ahead of time. So I'll have to put you on hold. I'll probably hit the mute button. I might have to take a few orders. I'm not sure. Okay. So I just want to let you know in advance what's going on. All right. So here we go. First thing is the time frame. We are on a 4-tick range chart. Okay. Not time-based, but a 4-tick range. If you're working with Logic 247, Dwayne's always talking about the 30-minute and the 5-minute chart. Inside the training room, Michael's using a 4-tick range chart. Okay. So you might be on a 30-minute chart right now. Okay. The way you get to a 4-tick range, top left-hand corner of the platform where it says 30 minutes or hour or daily, you want to just hit this drop-down box and select custom. Box opens up, go to range bar, and make that one look like a 4. Okay. Hit OK. This is the S&P E-mini on a 4-tick range chart right now. Okay. That's what it looks like. If the first trap that people really fall into is they come down to custom and they'll hit this tick bar. They'll make that 2 look like a 4, and then the chart kind of looks like this. If you're looking at something like this, you know it's goofy, it's wrong. You fell into the first sand trap, and you should be on a 4-tick range. The tip off is this thing here, this R in parentheses. That'll tell you you're on the right thing. Okay, so you're on a 4-tick range chart. And what the range chart is basically is that the height of each candle is 4 ticks in height. Okay? Some look bigger, some look smaller, but in the end, they're all the same size. And the reason for that is that Mike can be predictive, or a little proactive in placing his orders. So here's what you're going to hear inside the training room. Sometimes he'll talk about, well, if the high is this, then the low should be that. Or if the low is this, the high should be that. What he's setting up to do is he's getting ready to buy on a stop, which is above the current market price, okay, or sell on a stop, which is below the current market price, okay? So if all the rules qualify, all right, and that market takes off, he's right-clicking in the green portion here and placing a buy stop to get long. Or he's right-clicking in the red, all right, below the market price. So if the market does break down, he's getting short if the market falls apart. Okay? So when you start hearing that, okay, prepare yourself. He's getting ready to place an order, because if he knows the highs and the lows are going to be 4 ticks in height, okay, if it's going to print another candle, it's going to have to do it on the 5th tick. To make it less confusing, number one, if you're brand new, don't worry about what I just said. Okay, if it qualifies, you go inside the DOM and you left click. Okay, if it qualifies to the upside, you left click in the green. If it qualifies, you left click in the red. Keep it simple for the time being. Okay, if you really want to take it an extra mile, then the simple equation is this. Take the low, add 5 to it. That's the order you place. Okay, that's the price you right click on. Take the high, subtract 5 ticks. That is the price you right click at. Okay? Plus or minus 5 from then the high or the low. Okay? If it qualifies, if something sets up that way, while we're doing this, I'm going to show you and tell you how to do it. Okay? But I wanted to go over, you will hear that in the room, so it's important for you to identify what the heck's going on when he starts talking about it. Okay? There might be some cases where the market takes off and you're like, how the heck did you get into that trade? That's because he sold it on a stop, or he bought it on a stop. Okay, that was a big thing in the beginning, but so now it's you're your eyes are wide open now because you'll get a better understanding what's going on. Okay? All right. Back to our 4 simple rules, right? So we discussed time frame. Not time based, it's a 4-tick range chart. Okay? We went over why. So now we're going to work on the top portion of this chart. Okay? So here we go. This red and blue line here is referred to as the MA1. Okay? The green line is referred to as the BBC. That is short for bullish bearish cross. And so the 2 leads us into step number 1, which is this. When the MA1 is red, crossing the BBC, that's a bearish cross. If the MA1 is blue, crossing the green line, that's a bullish cross. Okay, the one that's highlighted here is a bearish cross. The reason is the MA1 is red. Okay, so that is step number 1. That really lights the match. Okay, when that happens, then you're looking for selling opportunities when it's red or buying opportunities when it's blue. Okay, again, the one that's highlighted is a bearish cross, so you're looking for a shorting opportunity. Okay, notice I didn't say sell it, sell it, buy it. Okay, you're looking for a shorting or buying opportunity because that kind of leads us into step number 2. Okay, which is this. After the cross, okay, and that cross happened right here. In fact, let me keep it clean here. After the cross, the normal thing for the market to do is to gravitate toward the BBC. That's normal, okay? So after the cross, you're looking for the market to touch or gravitate toward the BBC. So not only are you looking for the touch, you're looking for the close in the direction of the trend, okay? Which is depicted by this arrow here, okay? Again, looking for the touch and then a close in the direction of the trend. So notice how the candle is red. It's a down close. Notice how the MA1 is red. That's signaling, hey, we're looking for bearish setups. So I'm kind of going down a path where if you want to stack all the probabilities in your corner on this trade setup, ideally you want everything to be the same color. Okay, that's what you're looking for. Okay, so we have the bearish cross here. That lit the match. Hey, I'm looking for a shorting opportunity. The normal thing for the market to do after the cross is to pull back to the BBC. It does it here, and then we get that close in that down direction of the trend. All right? So number 1 is taken care of, and number 2 is satisfied. Okay? Next order of business is we're going to look at the oscillator portion of the chart. And basically, this is where the setup all exists. Okay, this is where it starts, ends, and begins. Okay, so here it is. This is called the slingshot, this indicator here. Okay, you'll download it when you download the indicators. Okay, but here are the nuts and bolts behind it. This blue and red line here is referred to as the cycle. Okay, the green line here, pulling away from the cycle, is called the green line. Nothing crazy about it, no crazy names for it. But the bottom line is this, okay? The space in between the two, okay, highlighted by the yellow arrow here, is referred to divergence, okay? Mike calls it separation. You might hear divergence, separation. This is what you're looking for in a bearish setup. You're looking for the green line to pull away from the cycle, kind of like a slingshot, right? You're going to pull it back, all right? That is what you're looking for, because here's the deal. What the cycle is telling us, it's red, okay? We like a red MA1. We like a red candle. we like a red cycle. The reason is this is telling us we were in a downtrend. The momentum's bearish right now on this 4-tick range chart. Okay? The green line pulling away along with this price action here, which is the normal thing, right? Pull back to the BBC and look for the down close. This pull away in this ongoing downtrend is suggesting this is just an air pocket. It's a selling opportunity on this little rally. Okay? So when you're faced with step number 2 and this separation or divergence, you're going to get short in this example. Okay? You're going to get short. That's the trade. And what you expect to happen in the end, as this green line, as it pulls away, the green line ultimately is going to come down and close the gap into the cycle. All right? And it's at this point here where the two intersect. What we expect the market to do from this point, because this is our entry, we expect the market to make a new pivot low. All right? Market makes a new pivot low, and it's at this point here we're closing the trade out. And the reason for that is this, guys. What we expect to happen over and over and over again, green line will pull away, close the gap. Green line will pull away, close the gap. Pull away, until, guess what? The cycle turns blue. And then we're looking for bullish opportunities, right? So then what we would expect, or what we'd want to see, is the green line to be underneath it. Okay? And pulls away, gets underneath it, and creating bullish separation, right? Bearish separation, okay? Bullish separation. And in the end, you're going to sell that rally, buy this dip, okay? And you do that as long as the one thing is happening. We're trending. We're making lower lows. We're making higher highs. Okay? I'll leave you with that. Don't go anywhere. I got to pick up this line. All right. I'm back. Like I said, I had to pick up that line, and that's going to happen. Okay? So as Linda's pointing out, correct, like a slingshot. Okay? The rubber band's being pulled back. Okay? The rubber band's being pulled back. And you're just waiting for that green line to get back into the cycle, reset itself, and then do it again. Now, as we know, the CFR members are in the room. Okay? This is the perfect scenario, right? This is all normal things, and the market isn't always normal. We'll have markets that are trading sideways. That's a big thing to digest and identify, right? The other thing is the cycles turn different colors on us, and the green line doesn't all get all the way into the cycle. All right. So what you can do, okay, the few things you can do is you can control risk, right? Remember, we have a stop loss on every single trade, right? An 8-tick stop. So if you are new, okay, if you're dead wrong and you're trading maybe the gold or the crude, you're risking $80. If you're trading the S&P 500, you're risking $100. If you're trading the mini Dow, it's closer to $40. Okay, every trade has a stop loss. You can control that. Okay, that you can control. All this other stuff, the normal thing, that's all fine and dandy. But when it's not doing the normal thing, okay, part of the money management rules will allow you to be aggressive. In other words, if we get short here and we have a stop loss behind it 8 ticks away, all right, we know the rule set is if the market goes 4 ticks in our favor, right, or 1 candle length, we move the stop to break even. And as it moves down, we move the stop, move the stop, move the stop. Because if this, what we expect is a normal thing, right? Green line get all the way into the cycle. All right. Sometimes the green line will pull away and then get halfway and then take off, right? Well, along the way, you're trailing your stop, you're trailing your stop, you're trailing your stop. So the idea is to get the risk off the table. You know, if it does do an about face, maybe you can grab a few ticks here and there. Okay, it's not a complete wash. All right, so you can control the stop because every trade has an 8-tick stop attached to it, and you're going to be using aggressive risk money management. So that's a plus. All right, but the guys that are brand new today, here's the deal. You're not signing up to learn to pick the top here and pick the bottom here and trade it from point A to Z. Okay, you're actually learning how to take a piece out of the middle. Okay, this portion here. Okay, and as I just said, every trade has a stop attached to it, and you're going to be moving the stop, moving the stop, moving the stop, moving the stop down until the cycle ultimately gets down. Okay, the green line gets into the cycle. Okay, so you're signing up to scalp. That's what you're learning to do. Okay, you're satisfied with a few ticks here and there. If you catch a runner, you know you'll expect more than that, but that's what you're signing up for. So you know you'll have to be in front of a trading screen. You're going to have to learn how to use the DOM. You know, the DOM here, if you're brand new, this is where we're buying and this is where we're selling. Okay, so you're going to have to take a look at a picture, digest the information, and then come in here and start buying and selling. Okay. Linda's question is, I heard Michael say today that if the price moves to the other side of the MA1, then move the price to break even. Correct. One of the money management rules is this. I'll give you a quick, if this was a short right there, Linda, remember after the pullback, what's the normal thing for the market to do? Gravitate toward the BBC, right? It does it here, but also closes in the direction of the trend. That's step number 2, right? And that's a regular trade. Okay. The money management rules are, if you did get short here, if 2 things, if it goes plus 4 ticks in your favor, you move the stop to break even, or if it closes on the other side of the MA1, and this will answer your question. Okay, that is a close on the other side of the MA1, that candle there, so your stop would go right there where you entered the trade. Okay, that is when it hits the BBC. That's a traditional slingshot setup. Okay, the other one is called the momentum trade, right, where you move the stop to break even right away. All right, so here we go. Another timeout here. My phone's buzzing. 1 sec. All right, I'm back again. All right, so we got off the path a little bit there, but the idea is that is the setup that we're going to be looking for in the next 45 minutes. Okay, so this is the traditional slingshot setup. Okay, there'll be some variations to it inside the training room. I'm going to point those out. Okay, so some markets are moving, especially the ES. So let's get to work here, okay? Because there's some good stuff going on here. All right, so here we go. First thing that should be on your piece of paper, if you're taking notes, is this. Number one, before we push any buttons on a platform, the market must be trending. It must be making higher highs or lower lows, okay? Once we've established that, then we'll go through the rules, all right? So the first thing I want you to do and get in the habit of doing, if you have DtPro, is hitting the zoom out button right here. Okay. A lot of times when you're inside the training room, Mike's got his charts up and they're blowing up pretty good. Okay. If you get in the habit of zooming out, you'll see a little bit more of the landscape of the market, what's going on, whether we're making higher highs or lower lows. Okay. I can't stress that enough. Hit that zoom out button. Okay. That's going to tell you more. So look, the first thing I do is zoom out. This is a market that's making lower lows. Okay, this one's an easy one to recognize. Okay, so we're trending. All right, so let's start going through the rules. Step number one, it's a bullish or bearish cross. That happened there, right? That's a bearish cross. Okay, so now what we're expecting the market to do is do the normal thing, which is pull back to the BBC. So for the moment, we're going to look to go short the ES on a rally toward the BBC. Okay. Let me show you a different picture, a different market. Okay. Here's the crude oil. Okay. We have a bearish cross here. After the cross, a normal thing for the market to do is do what? Pull back to the BBC. We're looking for a red candle. Why? Because the MA1 is red. Looking for a bearish cross, we get a red candle against the BBC. Okay. As I said earlier, get in the habit of zooming out. Are we trending? If you do that, no, we're not trending. Okay. We're sideways right now. Okay. So get in the habit of zooming out. That might make the difference. If you're losing money or struggling or breaking even on a lot of stuff, it's probably because you're caught into the chop. Okay. If the market's caught sideways, you're going to get grief. Okay. Again, this is what you'd see on the chart if you're looking at Michael's chart in the training room. It's fair game. Okay. But I'm telling you, if you get in the habit of zooming out, you're going to see a bigger picture. Now you might say, hey, Bert, it went down from here. Yeah, it did. Okay, you'd have been short from here. You would have had your stop at break even, and the result would have been break even. Okay, so you didn't miss anything. Okay, the market's consolidating. So again, to stress the point, hit the zoom out button. Okay, let's go back to the ES because that one's trending lower. Okay, all right. What's happening here? All right, so let me explain some things going on. Number two, stress point number two. Get in the habit of drawing trend lines. I just went over the first one. Hit the zoom out button to identify trend. The second one is after the cross, MA1 cross in the BBC, get in the habit of drawing trend lines. Okay? Get in the habit of drawing trend lines. Why do we do that? Two reasons. Okay, number one, the normal thing for the market to do, as it's doing now, gravitate toward the BBC, correct? If the market has so much bearish or bullish momentum, it won't get to the BBC. All right, it'll It'll go up a few ticks and then fall apart. That's why you draw the trend line in advance, because if it can't get there, and we do have bearish separation down low, you're going to want to be in a position to go inside the DOM and take action, right? Get short in this example. Okay, so reason number one for drawing the trend line. Okay, if it can't get to the BBC and it breaks the trend line, you're going to take action. Okay, the other thing, which happens a lot, the cycle will turn color on you, correct? So the trend line is required. Not only is it required, you also need to close below the trend line. Okay, so the other reason why we draw the trend line, okay, number one, we don't know if it'll do the normal thing, but in the process, if the cycle does turn color on you, the trend line is required. So you're already drawing the trend line in advance, and you're not fumbling around after the fact trying to draw it, but it's required when the cycle turns blue on you. Okay, it's required. And when it is, and you have the trend line drawn, a close below that trend line is required now to get short or get long. Okay, the close of that candle is what you're looking for when the cycle is a different color, okay, and the trend line is drawn. That's the close below the trend line. Okay, so that's why you draw the trend lines. All right, now two things. As I said earlier, if you want to stack all the probabilities in your favor, you want everything to be the same color. Okay, you want everything to be the same color. Is this the same color? Is this red? No, it's blue. So that you're watering down the probabilities. So it's not easy and it's not obvious. Okay, you're watering down the probabilities. See this one here? We pulled back to the BBC and we have the down close. The cycle was red. Okay, that stacks all the probabilities in your favor. Okay, now as Linda is saying, because she is a member, here's what we're facing right now. This is going to maybe confuse the brand new guys, but it's happening here, so let's talk about it. Right here, blue, waters down the probability. If the cycle is the wrong color, as it is here, and it has a 45-degree angle and moving against you, that is a disqualifier. You do not get short, you don't get long, you don't do anything. Don't push any buttons. That's a disqualifier. Okay? So again, ideally we want everything to be the same color, correct? At some point, the cycle will turn color on you. It's okay to take the trades, okay, if this color is blue, but it better not be going against you at a 45-degree angle, because if it does, it's suggesting we might be having a cycle reset and the market's going a lot higher, or it might just be consolidating. The bottom line is, more times than not, it's going to work against you, or something other than the normal is happening, and stay out. Okay, this is another trap that people will fall into a lot. The number one is the trend line thing, or the sideways trending thing. All right, but this is the second one. Okay, where they do everything correctly. Okay, they draw the trend line, they had the down close, and then all of a sudden they forgot to say, uh-oh, this is kind of going up at a 45-degree angle. Now, some of you might say, well, what's a 45-degree angle, right? That's your next question. You just take one of these squares, you kind of cut it in half, right, at an angle, corner to corner. But here's my suggestion. If you're asking yourself, is this 45, is it 30, is it 20? Don't take the trade. if you have to ask yourself those questions, it's not easy and obvious, right? If you want to stack all the probabilities in your favor, you want everything to be the same color, right? If you're questioning yourself about an angle of a blue line, okay, don't take the trade. All right, so that one, no trade. Long-winded explanation. It covered a few things there, okay? All right, let's move forward. Let's go to a different market. So we talked about crude earlier, being stuck in a range. Notice the first thing I do, zoom out, double bottom, double top, sideways back and forth, okay? In that example, Mark, yep, that would have, Mark's question was back to the S&P. If, let's draw it up. Right, that's the trend line. That is the short right here. Okay, plus 4 ticks in your favor or close on the other side of the MA1, right here. Your stop is break even. Result, break even. Okay. It looks like it. Okay. But the bottom line is break even. Okay. But good point. Here's what's going to happen. This will happen. You'll get this angle, and what'll happen is the market's going to go, and you're going to like, Bert, he told me not to take that trade. It's all his fault, man. I just should have done that, right? You'll blame someone else until the next time it happens. And then the next time it'll do this and then go against you. Okay? And then you'll be all confused and mixed up. Emotionally, you'll be nuts. All right? So, all I can tell you, all right, if this turns color on you, it's watering down the probabilities. Okay? Not so easy and obvious. Okay? What I can tell you from experience, and Michael will do it too, is if this thing's going against you at a 45-degree angle, more times than not, this is going to consolidate you, stop you out, break even, or just flat out go against you. This is one way to avoid a potential stop out. Okay? So just remember that, okay? You're more than welcome to take those trades, okay? But just from being in the room every single day for a long period of time, I've seen it to backfire. All right, let's go to the gold. Notice the first thing I do, zoom out 1, 2, 3, 4. I think right here we're consolidating. Okay, got a little chop back and forth. So we'll just move away from that. Let's go to the euro currency. Okay, been trending here. Okay, we're running into some support down here, which would give me a concern. But just to kind of, after the fact, kind of looked, especially those guys that are new, that is the bearish cross. That's the MA1 crossing the BBC. So now you're looking for bearish opportunities. What's the normal thing for the market to do? Gravitate toward the green line, correct? In the process, what are we doing after the cross? We're drawing a trend line. Why are we drawing a trend line? Because we don't know if it'll get back to this green line, correct? All right. Ultimately, we get to the green line and we have the red candle. We're 2 for 2 on color, right? Number 3. What color is the cycle? It's red. That's good for the home team. So we're 3 for 3 on color. Do we have the separation? Is the green line pulling away? Yes, it is. Look at all that space. Okay? On the close of that candle, if it's red, you get short right here. So what you'd end up doing is going inside the DOM and left clicking, right? Is the trend line required, Linda, at this point? If we get to the BBC and have the down close and the cycle is red, is the trend line then required? or anybody? Correct, Linda. No, it's not required. But you did what you were supposed to do and draw the candle. Because we didn't know if it would get here. But now what if the cycle turned color on us like it did here? Well, guess what? That trend line here was required, right? Not only was it required, we needed to close below the trend line. Okay, so again, you got to get in the habit of drawing the trend lines for two major reasons. Okay, after the trade, what do you expect to happen? The green line ultimately to get into the cycle. As I said earlier, a lot of times the market doesn't do the normal. Ideally, you would like it just to dump and go right into the cycle, but it doesn't. So at some point, it did a little zigzag, and at some point, you're out of the trade. Okay? All right, so let me get rid of my trend lines, move forward. So the euro is trending. However, right now, we're bumping our head against support. So for the moment, we're not going to do anything for now. Okay? Let's go to the British pound. British pound definitely is trending lower. Zoom out, zoom out, zoom out. We have a little bit of support here. And that's not so easy and obvious. The Swissy, definitely trending down, right? Here's a great example. Just ignore the slingshot color. Why we draw a trend line. Because it has so much momentum it can't get to the BBC. All right, let's try to find, what are the indices doing? Okay, so S&P 500 is consolidating here a little bit. See? A little bit of sideways. Start breaking down and spending some time underneath these lows, and we'll look to get short. Okay? And the reason we would get short is we have the bearish cross here, right? The MA1 is red crossing the BBC. Okay? So the S&P has a little bit more work to do here, okay? Because the cycle is red, but we need this green line to be on top of it. Okay, we need that green line to be overhead. We need to see something like this. Okay, so we're going to get ready to get short the ES. Okay, so stand by here. Now, yeah, we have support dots here. By the way, this is dynamic support. This is dynamic resistance. The good thing is, Linda, we broke dynamic support. Okay, and we broke dynamic support. All right, so let me explain to you, especially the guys that are brand new. The DOM. This is the DOM right here. This is where we buy and sell. Okay? What you can do with the DOM is you can automatically set a bracket order, which says this. As soon as you enter a trade, it will automatically place your stop loss 8 ticks away. Why 8 ticks? Because that's what the rules say. All right? So, if you haven't done so already, bracket options up here on top of the DOM, left click and activate it. Notice how the bottom of the DOM opened up? Check off buy stop and check off sell stop. Okay? Take it a step further, right click on the word sell stop, factor in ticks. Right click on the word buy stop, factor in ticks. Whatever factor is in there, it should read 8. The reason is, again, if I get short, I'm going to have an 8 tick stop behind it. If I get long, I'm going to have an 8 tick stop behind it. Okay? So now the DOM is all set, ready to fire. Okay? All right, so what we're doing right now is we're waiting for the market to pull back and do the normal thing, which is what? Pull back to the BBC or the green line if you're brand new. Okay? That's what we're waiting for right now. So let's see what happens. If it gives us another candle, we're going to draw a trend line. This is already becoming a problem with me. If you are a CFRN member, you're going to know we flatten out here. We don't necessarily want a red flat cycle. I'm not going to labor over the point right now, but if that turns flat on us, we ideally you want a decent slope. That's a good slope. Okay, something like that. But we'll see. Win, lose, or draw, we're going to... If this flattens out, I'm still going to do it, but I'm going to ask you guys to keep your hands off the dom. All right. You guys know that our CFRN guys, right? There's a potential momentum trade here. No, they're not the right color, Bart. I know that. I know you'll say that right away. But I know Michael will talk about it doesn't matter what color for him. Okay. All right, so there's our trend line being defined. So here we go. We'll do that. Don't worry about that right now, Linda. I knew that would. That's why I didn't labor over it too much. So let's see what happens here, and I'm going to just don't do anything, guys. Just watch me push some buttons here. So here's the trend line. Okay. So originally the trend line was drawn like, oh, great. Go figure. All right. I screwed that one up. All right. I don't know what I did wrong. I was trying to fix the trend line and tell you what was going on. Originally the trend line was like this. Okay. Then it was adjusted like this. This candle here is the close right here. Okay. That's the close. That kind of lit the match to the short trade. Now I was fumbling around with the trend line, and that's why you try to draw it in advance. I was trying to make a point, but I goofed it up. Cycle is red, and we have little separation. Okay. What made me adjust the trend line? That was going to be my exact point when I did it. The trend line started like this. Notice how the bottom was sticking out underneath it? So I had to adjust it. And while adjusting it, I fumbled the trend line and the market fell apart. All right, I'm not even going to touch the RTY. It's too fast. I won't be able to move the dom quick enough. All right. All right, so we'll pick something else, okay? Let's try to find something else. All right, again, here's the euro. Drawing the trend line. Okay. This is blue and curling up, right? Big fat disqualifier, okay? However, this would be the close below the trend line right here, and the market is going down. Okay, something that Mark pointed out earlier. Okay. Again, that's the wrong color. Let's go to crude oil. I think it's safe to say we'll be stuck in the range for the next 30 minutes, so we won't even screw around with that. I'm going to go to gold. Same thing. Gold is kind of just trading sideways. All right. Here we go in the S&P again. Draw the trend line. Okay. All right, so here we go. If the high is 46.75, then the low would have to be 45.75. You're going to get short at 45.50 on the stop. The high minus 5. Okay? And that would also be a close below the trend line, and it just did. Okay? Okay, so that was the pullback to the BBC with the down close. at the trend line. Okay. Observation. Okay, that's not necessarily good. Ideally, we like everything to be the same color, right? All right, it's gone plus 4 ticks in our favor. So I moved the stop to break even. Okay, I'm going to lock in a few ticks here. This green line is into the cycle, correct? All right, then we're out. All right, so a lot happened there. So let's talk about what just happened. Okay. So number one, the market was going back to do the normal thing, which was pull back to the BBC, right? In the process, we drew a trend line. It was the close here. The market closed below the trend line. The market keeps moving, so let me put it on highlighter. Okay. Right there was the close that lit the match. That's why we got short. Okay. Because we closed below the trend line. The market went 4 ticks in our favor. Not only that, it closed below the MA1, and we moved the stop to break even. Okay. The green line was getting into the cycle here, so I moved the stop down even further to grab a few ticks out of it. Okay. All right. So one second, my phone's buzzing. So here we go. Looking at the indices again. So hopefully that was the highlight of what we did and why we did it. Okay. So again, the cycle right now is blue, suggesting maybe the market will try to rally or something. Okay. So right now there's no trades in the ES. So let's back off from it and let's go to natural gas. Okay. Natural gas in April is trading sideways. Okay. So we need to make a higher, lower, low. And look at how the cycle is kind of losing steam here. It's red and starting to curl down here. So that does suggest the natural gas could kind of peter out here. Okay, Linda's talking about the euro. Okay. So let's talk about the euro. So zooming out, we're making lower lows. That's good for the home team. We want to draw a trend line. Linda, that's how your trend line should be drawn, just like that. Secondly, that's watering down the probabilities. Why? Because it's blue. Number two, the trend line's required because the cycles turn blue. This one, Linda, because it's starting to curl up, I would say no trade. So then someone might say, hey, well, that's not necessarily 45. It might be 30, 25, whatever. Again, my answer to you would be when in doubt, stay out. Okay. So I wouldn't do it, but it has all the variables, but that bothers me. So I wouldn't do it, to be honest with you. Okay, no matter what happens. Okay, so I'm going to take this off, but good observation because we were trending. So I like the fact that you identified that. Australian dollar pays $10 a point. I'm zooming out. That one's trending too. Okay, several opportunities to draw the trend line. Okay, a few times. I'm just looking for anything, sink our teeth in. Canadian dollar, making some lower lows here. That blue cycle there, that's flat. That's okay. But there's no setup there. But again, that would have been my trend line. Flat, flat, flat. Here's the color. Okay, that would have been the down close. No, actually it would have been, well, not even that. It's so flat I wouldn't even bother. All right, so anyways, let's move forward. Japanese yen, sideways. Notice how I'm zooming out. I'm seeing a bigger picture, okay? If I'm zoomed in, I see potential bullish cross here, right? Bullish cross here, pull back to the BB upside, up close. No bullish divergence. Okay, so no, not so pretty. And when you zoom out, we're trading sideways. Let me check on our friend crude in case she decided she wanted to break out, and she's not, still stuck in the range. Let's go back to the indices. Kind of a little messy down here with the cycle. Okay. Let's go to the Dow. All right, so let's talk about the Dow and the NASDAQ and some of these markets that are really flying. Okay, and we got some time, and there's some markets that are just back and forth. If you're set on trading the YM or the mini Russell or the NASDAQ, it is fast. Okay, here's one way to slow it down. 4-tick range chart. Go down to custom. Make that 4 look like an 8. And an 8-tick range chart. The rules are the same. The only difference is your factor with the stop loss is not 8 anymore. It's 16. You have to double it up. Your risk is commensurate to the time frame that you're trading on. Okay? But the rules are the same. Okay. So again, normal thing for the market to do is to pull back to the BBC. Okay. So again, that would be my advice if you're going to trade some of those faster markets. Go to a larger time frame. Okay. We have a bullish cross here. All right. Look at how fast. Just on the blink of an eye. Boom, 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 boom. Okay. Are we trending? No, we're certainly not in an uptrend. But you notice how the bars they're popping. That's not tradable on a 4-tick range. All right, so it looks like the ES is trying to make a new low here. It is. Okay, I can't give you anything in the ES because the cycle is just, it's messy. Nothing there. This was Frank. These currencies are really trending today, so let's have some opportunities to get in there. Take a look at gold. Gold's just stuck. All right, I'll give it a few more minutes here, and then I'll shut this thing down. Let's see what happens in the ES here. But here's the scoop, the takeaway from this afternoon. All right, number one, the number one thing that should be on your piece of paper if you're taking notes is the market trending, right? You do nothing until you identify that. One way you find out, you hit the zoom out button, okay? That will give you some details on whether we're trending or not, okay? Get a larger look at the market, okay? Because you're always looking left for prior support and resistance. So zoom out. Once you've identified that and you have a bullish or bearish cross, the next important thing you do is activate your trend line, okay? We talked about why you activate the trend line, okay? That's your next big thing. The other thing that you're going to be faced with is cycle color changes, right? This cycle is in the slingshot. Ideally, you want all the probability stacked in your corner. Everything's the same color. If it turns blue against you, then you're asking for trouble. It's not so easy and obvious, right? And if the cycle starts turning color against you, and it's pointing against you at a 45-degree angle, that's definitely not good, right? That's one of those big disqualifiers and big trap that a lot of people fall into. And if they're losing money, they're either A, they're caught in a sideways market, or B, that cycle's turned color on them. And it's turned against them at a 45-degree angle, but they're still pressing buttons. So anyways, I just drew the trend line on the ES, okay? Notice how the cycle is very flat and turning colors back and forth, okay? Even though the market is trending down, on the 4-tick range, it's hard to really get a setup here, okay? That would be the down close, okay? So don't do anything, but I'm just going to play along. What I did is I just left-clicked in the red. For those guys who are brand new, I just left-click here in this red, all right? We make money if the market goes down, okay? This is our stop loss right here, okay? Again, that is the down close, but this is no good, okay? I did this for the purposes of just pushing a button on the DOM and showing people how to get into a market. Now, the next order of business is if the market moves 4 ticks in our favor or closes on the other side of the MA1, which is this line here, we're going to left-click over our stop. We're going to drag it and release it. Drag it and release it. That's how we move our stop up and down. Okay? Drag and release it. Now, this is going to stop us out. Not surprising, okay, because this is a trap right here people will fall into. Why? Because they took the trade on that. It was a different color, watering down the probabilities. Few things here. The cycle's flat. That's not good. And, it's got a bullish tilt to it. Whether it's 45-degree angle or a 30-degree angle, whatever the deal is, okay, it's not good. All right, but I did that again is just to show you how to get into a trade on the Dom. This is an 8-tick range because Linda wanted me to. Thanks for suggesting that. Linda, this would be my trend line right now. Okay, we definitely are trending. Okay, we got a blue cycle here, watering down the probabilities. That is the down close. So instead of an 8-tick stop, we should have a 16-point stop. So let me put that all the way up here. 16 points. Okay, so that means you're risking $200. Okay. So let's see what happens. We get a close on the other side of the MA1. We move our stop down to break even. Okay. So if we get down to 40.5, that will be 8 ticks, right? We'll try to move the stop down to break even here. See what happens. Going to come down a little bit. Okay, our stop is up here, way the heck up here. It's 2 candle widths, candle heights. Okay. So if you're on a 4-tick range, 8. If you're on 8-tick range, it's 16. All right, so watch me just move the stop down. So my mouse is over the number 1. I left click on it, and I drag it all the way down to our entry. I've moved it down to our entry plus 1 tick. Okay. And what we're expecting the cycle to do, green line ultimately get down into the cycle, right? And then the market's going to make a new pivot low. And when they meet together, that's when we're going to get out. If it doesn't, the result is no harm, no foul. Okay? So that's how I would have done it, Linda. I hope that was eyes wide open. Okay. All right, so we'll wrap it up with that, okay? Thanks for pointing that out. That helped because that got everyone a chance to look at it, not only on a larger time frame, but how to place an order on the Dom real quick on a larger time frame. So that was pretty cool. Okay. So that's it. So every Thursday from 1 to 2 Chicago, we're going to hang out, do the same thing. I'm going to go over the same things over and over and over again. If you go through the same process, okay, and think about it from the standpoint that I'm kind of evaluating things, hopefully it'll start registering. Hopefully you start understanding, and hopefully at that point you have some confidence to start pushing a button. I know some of you are still in simulator. You're a little nervous because you're brand new. No biggies. If you're struggling, Linda had some great questions today, some good observations. So hopefully you guys all benefit from it. I recorded it. I have to decode it for YouTube. I put it on YouTube. If you Google CFRN Thursday, they're all out there. And I'll see you guys in the morning. Okay, so I'll be in the training room, and then I'm in the background. And we're there from 8:30 to 10:30. Okay, so that's it.